All right, Tesla shares plunging more than 12% since Wednesday. This comes after posting a larger than expected loss in the second quarter earnings update, also announcing that co-founder and CTO JB Straubel would be leaving the company. Here to discuss what's driving Tesla and what to do after a bad week for the stock, Gabe Hoffman, owner and general partner at Accipiter Capital Management, along with Gene Munster, managing partner at Loup Ventures. Always a good time for a Tesla debate, gentlemen. Thanks for joining us. So, Gabe, what did you learn this week that gave you more fuel for your short argument?
Everything that I've talked about to CNBC viewers all year has been proven right again. The second quarter was another disaster. Yes, Tesla moved metal, but they had to cut price thousands of dollars, so margins were a disaster. They lost a lot more money than investors expected. You know, about 5 months ago, Gene and I were here together on CNBC, and I talked about the first quarter being a disaster, and I asked Gene, what type of miss would it take to get you to change your mind? He said about 20–30%, and that happened, and the stock was 60 points higher then. I'd love to know what he's thinking today.
Gene?
Well, you know, maybe before we, the simple answer is that they had some pretty big upside in the March quarter. I think when we were talking 6 months ago, I said that 2019 is going to be a transition year. Undoubtedly, there's going to be ups and downs. We had a down in the March quarter, massive miss, as you just discussed. But on the flip side, in the June quarter, there was significant upside, going from 53 to 78,000 Model 3s. I would also like to just quickly point out, I think that part of that dip more recently is around the loss, the margins, but I think around the brain drain. I just want to quickly address that brain drain question here. And the best perspective is JB Straubel has been associated as kind of the co-creator of Tesla. In fact, that's not true. Really what JB is, the best analogy is he is the candy man. He is not Willy Wonka. Often those two people are considered the same person. As long as Elon Musk is in the reins, and they're continuing to grow their vehicles, I'm going to probably continue to believe in this story.
Gabe, I mean, you know, for a long time, the story with Tesla was if only they can get production up to roughly the level they're at, it seems like they might be able to attain scale and kind of have their place in the industry. Now there's all these questions about the margins and, in fact, just how big the ultimate opportunity is. What did this quarter tell you about those questions?
This quarter told me that they've got a lousy quality car in the Model 3. It's near the bottom of Consumer Reports rankings. It's got a design flaw. You just saw a story out this week about how it catches about 15 pounds of dust and dirt underneath, and they had to chop price down to 50. It's going even lower. They cut price again in July. So, yeah, there's demand, but it's at a price that Tesla can't make money, and they lose a ton of money. With the brain drain, it's important to note, this is 2 out of the last 3 quarters that you had a major executive departure during the quarter. If you look back at the 2018 proxy, there's only one guy left, Elon Musk, out of the named executives. The CFO, chief technology officer, head of marketing and sales, head of manufacturing, they're all gone. If you go to the Twitter, Tesla executive departures, you'd see out of the top 100, most of them have left over the last year. I mean, Tesla's got more executive turnover than a McDonald's.
So, Gene, I mean, I know the brain drain you think isn't as bad as feared. What about the profitability question? The fact that margins were such a miss and that even if they can deliver on target, it's going to be hard to do so profitably.
Becky, Sarah, I'd say that the 1% miss in gross margins was just that. I understand direction. It's gone from 24 to 20 to 19, and investors get concerned about that trajectory. But in the grand scheme of things, you need to take that into the context of how much cash they have. They have $5 billion in cash. If they continue at this a pace where effectively they would come in, let's say, 10 to 15% below their targets over the next 6 quarters, they'll have enough cash for the next 2 years. When I think about the margin question, it needs to be in the context of cash. I'm not trying to make excuses for the fact that they are losing share. I'm simply pointing out that when you transform an industry, there is an incredible amount of pain. Tesla's going through that. It is as evidenced in some of the turnover because it is an intense environment to work, and also in the margins. But I'm confident in this theme, and we talked about this 6 months ago. The future is electrification. There is no chance that gas vehicles will be powering the world in 100 years. And if you do believe in that, I think that the other automotive makers are materially behind, and I think that it's the right thing to do to invest in the business right now.